We'll touch base with you to understand the details as and when they are announced. There's a goodish bit of jargon we'll need your help with. But now let's go over to a special panel that Shireen has with her with respect to what India Inc. is expecting. Over to you, Shireen.
Well, thanks very much, guys. Yes, we are counting down to the union budget, and of course, it's the wish lists have been done and dusted. Let's see what the finance minister finally delivers in a short while from now. But joining me from FICCI, Subhrakant Panda, the president of FICCI, and Sanjiv Mehta of HUL. Gentlemen, appreciate you joining us here on the program. Sanjiv Mehta, you know, every time the budget comes around, there are graphic plates ready on what is going to be more expensive and what is going to be cheaper. What are you bracing yourself for in the context that everyone hopes, or at least is confident, that this could be the budget that delivers for the middle class?
Yeah, thanks, Shireen. Morning, everyone, to the viewers. I would say that first and foremost, it has to be a growth-oriented budget. You know, when the growth is good, all other indices fall in place. The next is, I don't think there would be any knee-jerk reactions from the government. They would try to ensure that the fiscal deficit, you are in the direction of consolidation. There should be more Capex expenditure, maybe not the same percentage increase as the previous year. I don't think there would be any tax increases, because this is a time when you want to give a boost to consumption, when you want to put more money in the hands of more people. So I don't think there would be more tax increases, rate increase, but I think the government's focus on increasing tax as a percentage of GDP through better collection, through plugging loopholes, all those are going to be the measures which will continue.
Sanjiv Mehta, yesterday's economic survey, the headline chapter was that the recovery is now complete. It is now time as far as resurgence is concerned, and that's the thematic that we're going with here on CNBC-TV18 for the budget as well. Where do you believe the growth drivers can come as far as this budget is concerned? Capex is given, whether it's rail or outside of that, and of course a big hope as far as defense is concerned. But where do you believe the growth drivers are likely to come this time around? What will be the big numbers that you're going to be watching out for?
Big numbers one would be watching on is public capital expenditure, no question about that. The second is one would be looking at what is the outlay on Manrega, because we must understand that inflation has taken a toll on the wallets of people at the bottom of the pyramid. So the government would try to alleviate their suffering, certainly in rural India. And in case the government has the capacity, then if they can put more money in the hands of middle class, it would act good from a consumption perspective.
Subhrakant Panda, let me come to you now. What's the big expectation as we count down to the budget? Of course, Capex is a given, and I think the survey made that point very clearly, that even though there are incipient signs of private sector capital formation, the government will continue to do the heavy lifting as far as Capex goes. Outside of that, what's the industry most confident of by way of delivery in this budget?
Well, good morning, Shireen, first of all, to you and your viewers. As Sanjiv mentioned, I think the overwhelming expectation is that it will be a growth-oriented budget, simply because I think we are very well placed in terms of revenue buoyancy. And I mean, you know, including January, the GST collections being the second highest ever, I think that's a very good omen heading into the budget presentation today. And in that context, I mean, I would just like to reiterate what Sanjiv mentioned, is that we are certainly seeing or expecting a significant outlay for public sector Capex to continue providing a boost to the economy. And measures which will attract global supply chains to India, thereby, as I said, the manufacturing sector getting a boost, which is imperative from an India growth point of view. Just to reiterate, as we all know, that agri sector being what 17–18% of GDP and 45% of jobs is not tenable. And while services sector will certainly take up a lot of slack, it's done very well. I think most sectors such as hotels, travel, etc., are all retail are all back to pre-pandemic levels. but there's no taking away from the long-term importance of manufacturing as far as India is concerned.
Well, no taking away from the importance of manufacturing. You know, FICCI has put on the table a recommendation that the government should continue with the concessional tax rate of 15% for the next 5 years to provide a predictable roadmap to both domestic and global investors. The sun sets on that in 24. If that were not to happen, how disappointed would you two gentlemen be? Sanjiv Mehta, let me start by asking you.
We have, because we are looking at it from a lens that it's a wonderful opportunity for the country to double down on manufacturing and attract global supply chains to India. You know, if it doesn't happen, it's not going to be the death knell of manufacturing in the country. Let's accept it. There's huge momentum. There's lots happening. PLI schemes are there. The tax rates have come down. But when the moment comes, one should not let any opportunity go by. That is the reason we are looking at if the government could extend, it would create that much more difference between us and other countries who are competing for the same global supply chains.
Okay, you know, a man who joins me here on our fabulous set here in Delhi would have otherwise been standing next to the Finance Minister on the way to Parliament. The former Revenue Secretary Tarun Bajaj is right here with me in our studio. Mr. Bajaj, what an absolute pleasure. Thank you very much for joining us. Let me start by asking you, are you missing the action or are you feeling relieved?
I won't say it's either way. One thing which is there is that we all have to move on. And I've moved on, so I'm very happy about it, and I'm sure the team that is there will do a great job of the budget.
Well, you may have moved on from preparing the budget, but we're not going to let you to move on from analyzing the fine print of the budget, Mr. Bajaj. We're going to get you to comment on that. But let me start by asking you, you know, the two gentlemen there saying that the 15% concessional tax rate should get an extension for another 5 years. This is India's opportunity. This could be India's decade. The government should go all out. I know you have a difference of opinion there. Do you believe the government is likely to go that route or hold back?
I would not like to speculate as to what the budget would say. I'll wait for an hour and a half to see what the budget actually contains.
But is there a case for that?
I think last time I had told FICCI or CII that they should give evidence for that, and I was reading somewhere there are about 1,300 odd companies that have taken the benefit of 15% tax. So if there are a large number of companies that are coming in the 15% and need some time, maybe there's a case, but it should be backed by facts.
It should be backed by facts. Is there a case for a boost as far as consumption is concerned by way of cutting taxes? The expectation is that finally this budget could deliver on the aspirations of the middle class and provide that much needed relief. That's the expectation. I don't want you to speculate. I'm asking you, is there a case? Sanjiv Mehta believes that there could be a case to provide a consumption boost. Is there a case?
I don't know whether you're asking that should there be a reduction in the indirect taxes?
Because no, in the direct taxes, on personal income tax specifically.
Okay. On the personal income tax, I have a very strong view which is backed by facts. I would say that out of about 7.5 crore people who file returns, it's only about 1 crore who are actually paying taxes. The remaining 6.5 crores are actually taking exemptions or just filing returns and not paying any taxes. So what are we talking about? Are we saying that these 1 crore people with 5 crore population out of 140 crore population is the one that is going to give a boost? I am not sure whether that is the right approach.
You don't believe that there is a case then?
I'm not saying there's a case of... what I'm saying is that it's a larger question in the sense that in case there is a change in the personal income tax regime, it has to be a holistic one. It should not be an ad hoc one. And if there's a holistic one other thing which the government has to see with a lot of headwinds in the coming year, that there is not too much of revenue loss on account of the exemptions or on account of the concessions that are being given. So in that context, I would say the government has to tread very carefully and not get swayed by requests by a few people, because in this country we have to broaden the base.
From many people, Mr. Bajaj, not a few people. There are requests pouring in from many sectors, many people, and of course the average citizen as well.
I would like to say something. There's a lot of perception issue over there where they say the middle class. The middle class is much larger than this 1 crore number. So if 1 crore people only are paying taxes, and out of which I would believe there are very high net worth individuals also who are paying taxes. So we should actually analyze data, go granular and see what is it that we are required to do.
Okay, the other big request that came in from industry, and both Subhrakant and Sanjiv Mehta talked about that, was the government continuing to do its bit as far as Capex is concerned, heavy lifting on Capex. In light of what the economic survey has also said and what the various estimates are, what do you believe the Capex number could potentially look like? You're smiling, but I'm asking you for your best guess.
Okay, let me answer that in a roundabout fashion. One thing which I would say that the government has done a great job on Capex. I was just looking at the figures in 2021 when we were going through the COVID year. Our revenue expenditure went up by almost 30-odd%, but the capital expenditure also in that year went up by 27%. So normally the tendency would be when the revenue expenditure is going up, so you conserve revenues, so what do? You curtail your capital expenditure. If the government did well then, I see no reason it will not do well. So 7.5 lakh crores number should go up, but another...
What, to 9, 9.5?
Yeah, it is quite possible that it may touch between 9 and 10, but let's see what the government finally decides. But one thing which I would also like to say is that last year government gave 1 lakh crores to the states. And that was very important because the state's fiscal deficit was touching more than 3. And in the coming year, it is expected to go down further. So I think there is now also a case where the states should be cajoled to spend from their own kitty rather than taking money from the center. The center may continue to give some incentives to the states to spend capital expenditure, but I think the focus overall of the government would remain on Capex.
On tax, and I think, Jahangir Aziz put this very well on the program earlier this morning, saying that the last 2 years the government has systematically underestimated its tax collections and over-delivered on that. Given what we've heard so far and the estimates that the survey has put forward as far as nominal growth is concerned of 11%, what would you put your number on?
Talking of the growth rate?
Yes.
I think...
And buoyancy.
So I would say the growth rate would be closer to what Anand has mentioned in the survey, and he's been very pragmatic on that. And on the revenue figures, I would say that the last 2 years have actually shown us, and I bet I know Jahangir very well, so I would bet all the economists to put their neck out on the day one. Nobody told me that the revenues in 21-22 would grow by 34% on day one when the budget came out, and similarly for the current year also. But I think what the Department of Revenue and the government have done, I think we can now not rely on a buoyancy of 1, but we could look at a buoyancy of 1.2 to 1.25 on at least the coming year, because there's a lot more that the Department of Revenue is doing, and I think it will be a fruits for us.
You know, I wish I could ask you, because that was my favorite question to you. What is the GST run rate going to be? Given the fact that we've done 1.56 lakh crore rupees and that number was released just yesterday, but what's your expectation from here on?
Last time when I spoke to you on this, I said we should expect an average of 1.50. So I think we are moving. In fact, now that I'm no longer on the hot seat, I was expecting an average of 1.55 when I was talking to my people. So so the government will be very close to that figure of 1.55, between 1.50 to 1.55 on an average. And I think on GST front, the government has done a great job. They grew by 30% in the last year and growing by almost 25% this year. So that is what has given the relief to the state governments also, not to be asking for a lot more from the center than what they have earlier been asking.
Well, Mr. Bajaj, you're going to be with us. Tarun Bajaj is, of course, our budget editor, along with our star cast of budget editors, and he's going to be right here with me in the studio through the course of the budget presentation. Sanjiv Mehta and Subhrakant, before I let you go, Sanjiv, the one thing that you believe, if the government and the budget delivers on, will be, will sort of really toss the ball out of the park, so to speak?
The reality, Shireen, is whether it's a business or a government, there's nothing like one thing. It has to be a growth-oriented budget. We should not be playing to the gallery. We should be focusing on the fundamentals. While, yes, we have to alleviate the suffering of the poor as far as the near term is concerned, but do not take your eyes off the medium and long term. I think we have a great going as far as the growth rates are concerned, as far as reining in inflation is concerned, while improving the fundamentals, be it logistics, be it the public infrastructure, and that focus should not go away.
Subhrakant?
It's again hard to pin down one thing, but what I would like to see is some sort of a glide path towards fiscal consolidation, while making it clear that there's not going to be any hard and fast boundaries, and we will react to the situation as it pans out during the year, because there is much to be optimistic about when it comes to India. But the global situation is significantly different, with 1/3 of the world's economy is facing recession. And that is something that I think we have to be, the finance minister has to keep an eye on, and be nimble in approaching not just how we present the budget, how she presents the budget today, but going ahead during the course of the year.
Mr. Bajaj, before I toss it back to our colleagues in Bombay, fiscal deficit, the chief economic advisor in his conversation with me last night said very clearly there is no reason to believe that the government is going to veer away from the path of fiscal consolidation and the fiscal glide path that has been articulated already. What's your best guess as far as FY24 is concerned? Sub 5%? Sub 6%?
Yeah. I think it will be closer to sub 6%. It will be sub 6% or closer to 6%. This is what my estimate is, because I think the government has been over-delivering on this aspect also, other than the revenues. They said 9.7 in the first year, gave 9.2, said 6.9 and gave 6.7. This year 6.4. Let's hope it will be 6.3. So I think next year should be less than 6.
Well, Mr. Bajaj, I will come back to you. Sanjiv Mehta and Subhrakant Panda, many thanks for joining us. We will, of course, check in with you post the Finance Minister's speech to see what Budget 2024 will deliver. Budget 2023 will deliver. But the market's 351 points higher. That's the story on the Sensex. Prashant, Lata, Sonia, back to you.
All right. Thanks a lot for that, Shireen. We'll keep coming back to you for more. The market is at the high point of trade right now, 100 points higher. Just a little bit around that 17,700 mark, and clearly the focus is on growth. That's the big engine for the market that we're looking forward to in this budget. Let's do one thing. We'll talk about taxation. No tinkering on taxation. That's the expectation at least the market has, but we'll get you a big discussion lined up in just a bit on what the budget wish list is with respect to taxation. We have Sudhir Kapadia, the national tax leader, EY, Dinesh